Welcome to this deep dive. Today we're getting into Unicommerce eSolutions Limited. We've got quite a stack here: official board meeting notes, their financials for the last year, both standalone and consolidated.
Right. And the auditor's reports, plus key bits from their Q4 earnings call.
So our mission, let's say, is to pull out the key performance bits, the big strategic moves, and, where they see things going.
Yeah, we want to give you a clear, concise picture of where Unicommerce is right now and where they're headed, cutting through all the jargon.
Exactly. We have the official stuff they told, the stock exchanges, the hard numbers, the auditor's take.
And the company's own story from the earnings call gives you a rounded view.
Okay, let's jump in. That board meeting on May 5th caught my eye first.
Yes, Monday, May 5th, 2025. The board met, looks like from 4:00 p.m. to 5:30 p.m. And the main thing on the agenda was approving the annual audited financials, standalone and consolidated for the year ending March 31st, 2025.
And this isn't just ticking a box, is it? There are regulations involved.
Precisely. They specifically mentioned it was done according to regulations 30 and 33 of the SEBI listing obligations. Basically, the rules for listed companies in India to keep investors informed. Transparency.
Right.
And they said the results and the audit reports are up on their website for anyone to see.
Okay, so the board approved it, but what about the independent auditors? SR Batlaboy and Associates, right? What was their verdict?
Yeah, SR Batlaboy. They gave what's called an unmodified opinion for both the standalone and the consolidated results.
Unmodified. That sounds positive.
It is. It basically means the auditors are saying, yep, these financial statements give a true and fair view, and they line up with the required accounting standards in India. Their audit checks if the company followed the auditing standards and, ethical requirements when putting the numbers together.
So a clean opinion from the auditors. Good start. Now let's get into those numbers. FY25 consolidated results. What were the big takeaways?
Okay, FY25 consolidated, it shows pretty significant growth. Total revenue hit INR 1,347.9 million. That's a jump of 30.1% compared to the year before. Solid growth there.
30%. Wow. Okay. And profitability, how did that look?
Also strong. Adjusted EBITDA, that's a key profit measure before interest, tax, depreciation, amortization, that grew by 56.3% year on year. It reached INR 283.9 million.
Nice.
And profit after tax, PT, was also up nicely, 34.3%, hitting INR 176.2 million.
So more money coming in and more of it actually sticking as profit.
Exactly. And for investors, the earnings per share, EPS, for the full year climbed 33.9% to INR 1.6.
Oh, yeah. Q4 FY25 was really impressive. Revenue shot up 70.6% compared to Q4 the previous year. That's INR 452.7 million.
70%.
Yep. And adjusted EBITDA almost doubled up 98.1% to INR 88.8 million.
Wow. So a really strong finish to the year. Suggests good momentum.
Definitely. It kind of hints that maybe some recent strategies are really paying off, setting them up well for FY26. It makes sense. What about their cash position? How are they looking in terms of, ready money?
As of March 31st, 2025, they had INR 353 million in cash and bank balances. And maybe more importantly, their net cash flow from operations really surged. It hit INR 279.6 million in FY25.
Compared to
just INR 61.7 million in FY24. So a huge improvement in generating cash from the actual business.
That's a massive difference. Okay. Strong financials overall. Now let's talk strategy. The Shipway acquisition was a big move. Can you walk us through that?
Right. So during FY25, Unicommerce got to 100% ownership of Shipway technology. They bought about 48% back in December 2024 and then got the rest through a share swap deal approved in March 2025.
A share swap. So they basically traded Unicommerce stock for the remaining Shipway stock.
That's the idea. It helps align everyone's interests going forward.
And how's Shipway doing now that it's fully part of Unicommerce?
Well, what's quite interesting is Shipway actually hit adjusted EBITDA break-even in Q4.
Break-even already, after just coming fully on board.
Yeah, they had a small loss in Q3, so it was a quick turnaround. They put it down to synergies kicking in, cross-selling opportunities.
Right, selling Shipway stuff to Unicommerce clients and vice versa.
Exactly, and finding operational efficiencies now that they're integrated.
So what does Shipway actually do? What are their products?
Their main thing is career aggregation. That's about 85% of Shipway's revenue. It helps e-commerce sellers manage lots of different shipping companies through one platform, makes logistics simpler.
Okay.
They also have something called ConvertWay. That's an AI tool for marketing automation designed to help sellers, convert more website visitors into actual buyers.
Got it. So logistics, streamlining, and marketing tools. How does this fit into Unicommerce's grand plan?
It seems pretty central to their goal of being a one-stop shop for e-commerce businesses. You've got ConvertWay for the marketing and sales part, Unicommerce's core platform for managing everything after the supply chain stuff.
And now Shipway handling the shipping and logistics piece.
Exactly. They're aiming to cover that whole e-commerce lifecycle for their clients.
Makes a lot of sense, offering that complete package. Okay, let's switch back to the original Unicommerce business. Unier, they sometimes call it. How did it fare on its own in FY25?
So the standalone Unicommerce business, yeah, its revenue grew about 10% in FY25.
Okay, still growth, but
But it was slower than the 15% they saw the year before. They said this was mainly because the overall e-commerce market growth was a bit muted. This also affected their net revenue retention, NRR. It moderated to 103% from 108%.
NRR, that's basically how much money they keep from existing customers,
Right.
including upsells.
Yeah, exactly. So 103% means they're still growing revenue from existing clients, just not quite as fast as before.
So some market headwinds impacting the core business. But they were still adding clients, weren't they?
Oh, yes. Despite the market, they actually had their best quarter ever for signing up new enterprise clients in Q4. They onboarded 125.
125 new big clients in one quarter. Any notable names?
Yeah, they mentioned Tata 1MG, Mayflex, Reed, and Taylor, even some brands from Shark Tank India. So quite a mix.
That definitely shows their platform still has strong appeal. What about the total number of enterprise clients? Did that jump significantly?
The net increase was more modest in Q4, went from 934 to 953.
Okay, so they added 125, but only netted about 19. Must have been some churn.
Yeah, they indicated there was some churn, particularly among smaller, long-tail customers. They also mentioned a strategic shift, focusing more on landing those high-potential enterprise clients, even if the initial minimum guarantee, the NG, is a bit lower.
Ah, aiming for quality over just quantity. Betting on those bigger clients growing more long-term.
Seems like it. A calculated move to drive faster adoption and bigger growth down the line. It's a shift that could really impact their revenue mix later on.
Interesting. What about the pricing, the revenue per item?
For the standalone business, in Q4, it was INR 1.1 through per item. The average for the whole of FY25 was INR 1.2. They also noted they've started putting price escalation clauses into new contracts signed in FY25.
So building in future price increases. And are they still heavily reliant on their biggest clients,
Actually, they mentioned the revenue share from their top 10 clients is decreasing.
which is generally a good sign, right? Diversification.
Yeah, it suggests they're spreading their risk and growing with a wider base of customers.
Okay, so navigating challenges but making strategic moves. Let's talk innovation. What's new on the product development front? Tech moves fast.
Absolutely. And they seem to be investing here. They mentioned enhancements for B2B workflows, making order management easier for sellers with maybe limited warehousing,
Mm-hmm.
and adding quick commerce features into the main Unicommerce platform. Shipway, meanwhile, added features for handling really small, light shipments under 500 grams.
Yo, adapting to trends like quick commerce and specific shipping needs.
Right. And ConvertWay added RCS messaging, that's rich communication services, alongside WhatsApp and SMS for their marketing tool.
So more channels for businesses to reach customers. Anything else major in the pipeline?
Yes, Unireco. That's their payment reconciliation platform. They said it's on track for a commercial launch by the end of Q1 FY26.
Payment reconciliation. That's a bit different from supply chain and logistics, expanding their scope.
Seems like it. It could be a whole new revenue stream and make their platform even stickier for clients.
And AI. Everyone's talking about AI.
They mentioned leveraging AI too, both for enhancing products and making their own operations more efficient. It's also worth noting, technically, they capitalized about INR 63 million in employee costs related to developing these new things.
Capitalized, meaning treated it as an investment, not an immediate expense.
Exactly. It was for developing Unireco, Uniship, Uniecho. They noted Uniship has now been moved over to Shipway as part of the integration, and the Unireco costs will be expensed normally once it actually launches.
Okay, clear investment in R&D. So, looking forward now, FY26. What's their outlook? What are they pinning their hopes on?
They sound pretty positive, especially about the long-term potential of India's e-commerce market. They keep saying it's underpenetrated. They estimate the total addressable market at over 1.15 billion US dollars. So lots of room to grow.
And how do they plan to capture that growth in FY26?
The strategy seems to be keep signing new clients, push cross-selling across the whole product suite, Unicommerce, Shipway, ConvertWay, find new ways clients can use their platform, and keep expanding internationally.
So more of the same, but executing well.
Pretty much. They emphasize disciplined execution, scaling revenue, improving efficiency, and driving profitable growth. They're aiming to grow faster than the market overall, targeting NRR over 100%, landing new clients, and scaling up these new products like Unireco.
What about profitability for the different parts? Will Shipway and ConvertWay start contributing significantly to the bottom line?
They expect Shipway and ConvertWay to operate mostly around break-even in the near term. Any profit they make will likely be reinvested back into growing those businesses. So the main profit driver, at least for now, is expected to be the core Unicommerce platform, Unior, because it has operating leverage. As its revenue grows, profit should grow faster.
Makes sense. Focus profit generation on the mature part, reinvest in the newer growth areas.
Yep.
Okay, two smaller points, maybe the IPO expenses that came up.
Yeah, they mention around INR 303.6 million in total IPO costs, but they stated these costs are recoverable from the selling shareholders.
Ah, so not hitting the company's P&L directly.
Right, although they did say some vendor invoices are still outstanding, so they've made provisions for those in the accounts.
Got it. And lastly, there was a mention of other expenses increasing in the consolidated figures.
Yes, the main reason for that jump was simply including Shipway's running costs after the acquisition. That added about INR 160 million in FY25. They expect those other expenses to stay in a similar range now that Shipway is fully baked into the numbers.
Okay, that clarifies that. Right, we've covered a lot of ground. Let's try and summarize. What are the big takeaways from this deep dive into Unicommerce?
I think the main story is strong overall growth in FY25, really powered by both the core business and that strategic Shipway acquisition. While the standalone Unicommerce growth moderated a bit, maybe due to the market, their ability to keep winning new enterprise clients looks really promising. And putting Shipway and ConvertWay together with their core platform makes them a much more comprehensive player in that whole e-commerce enablement space. They're positioned quite well now.
What stood out most to you? Any aha moments from digging into these sources?
For me, a couple of things. How quickly Shipway got to break even after the acquisition that suggests the synergy plan is actually working. Also, their continued push on innovation, especially using AI, and just that clear ambition to be the end-to-end solution. That seems significant.
And for you listening, hoping to get the gist without drowning in data?
Yeah, hopefully we've boiled down a lot of info into the key bits. The solid financials, the strategic acquisition paying off early, the focus on innovation, and their plan for the future. You get the core story of their performance and strategy.
Okay, so here's a final thought to chew on. As Unicommerce pulls these pieces together, the core platform, Shipway, ConvertWay, Unireco coming soon, and keeps innovating, how might this integrated offering really change the game for e-commerce businesses? Not just in India, but maybe wider.
Right. What new doors does it open for their clients, big and small? And what new challenges might pop up when you try to be everything to everyone in such a dynamic market?
Something to think about. Thanks for joining us on this deep dive.